So this is going to be the most complete trend line strategy video that you will hopefully ever find. And after this, I hope all of your questions regarding trend lines will be answered. So I will show you how to draw them, how to use them, how to trade with them, and a few other tips and tricks on how to use multi-time frame analysis with trend lines and adding other tools. So as the name suggests, trend lines should be used in trends. This is something that many people overlook. And when it comes to trend lines, we want to use them to describe trending phases. Not always will you be able to find a trend line, and not always will the trend lines also align. So when I approach my trading and when I coach my students, first of all, I always tell them just draw trend lines wherever you expect them or wherever you may believe there could be a trend line hiding. So let's take a look at this chart, and we are going to take a look at this uptrend here. There's obviously an uptrend. The market moved from down the left to the top right. So there is a trend. There are micro trends in here. There are ups and downs and ups and downs. So let's take a look and let's see how we can apply trend lines, and let's see how we can find it. And this is a great way if you are not familiar with trend lines, or maybe you don't know how to spot them. Just start with drawing trend lines everywhere, and after a while your pattern recognition skills will improve. So let's see, we start here at the bottom of the trend. That's always where I like to start, and then let's just connect the swing lows. So you can see here we have our first swing low, the second swing low, and this is a trend line that has been touched twice, two times, and then the market just came close to it but has not been back there yet. So let's try to see if we can then describe this later phase of the trend with a new trend line. So we start here with this, and then let's try to align the lows. And you can see this looks a little bit better. You can see here we have 1, 2, 3, 4 touch points. So definitely a valid trend line here, and I will just use them or leave them for now on my charts and observe how is the market going to react. Are we going to see a bounce? Maybe going to see a breakout? Because very often trend lines turn, they start being support, and then on a breakout they often become resistance, as we will see. And then what else we can do is try to define the upside of such a trend. So obviously when we just connect the highs here, this is not going to line up because this is way too steep. This is probably way too shallow if we just connect those two highs. Okay, maybe not. You can see we have 2 touch points here, 1, 2, 3, and then here we get a very, very nice trap pattern. So this is something that I want to address later, but here we have already a great example, a trap pattern. So the more obvious something is in trading, the more unlikely it is that you're going to make money off of this, because everybody and their dog will be aware of that, and the more people are aware of something, then it's getting harder and harder to trade into the same direction. So this is also true for support and resistance, or even the very big moving averages. When a level has been touched so many times and so precisely, then there's a very, very high chance that the next touch points are either gonna violate the level or they're gonna come short of the level and turn ahead. And so try to mess with the trader and the trader's mindsets. So very, very often the market is gonna give you such a trap pattern, such a violation, fake breakouts. Fake breakouts are very common, and many traders struggle with them because even after months or even after years of trading, they still haven't realized that if something is very, very obvious, you have to be very patient with it, and you don't trade a trend line or a support level blindly. You always wait for a reaction around it. For example, here we could go in and we would see a divergence here on the lower time frames. Or we wait for the market to break a previous swing low or swing high to get into such a market. But just because the market is touching a trend line, it doesn't mean that you're automatically going to go short. That is very, very important. That's how many traders lose a lot of money. Then we can also try to look for intermediate trend lines, inner trend lines. So here you can see I expect something to be in here, not very accurate. Here it used to be very nice, so you can see we have a triple trend line here as support. Let's zoom in actually. So this trending phase started here, support, 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 and you can see again, after 2 times the market is then breaking it, violating it a little bit. So then the support trend line becomes a resistance trend line, becomes a support trend line, becomes a resistance trend line, and so on and so forth. So seems that we should definitely keep this trend line on our charts, because even though there are periods where the market is breaking through this trend line, the market has a high tendency to come back to this. So this seems to be something that we should definitely keep on our charts. And then you could also try, for example, to align Fibonacci levels with your markets. So we can see that when we zoom out here, this trend downwards has started here, and here's the bottom. So let's try to see, and not always will this work. Will we get a Fibonacci? So we use our Fibonacci tool, draw it from the top to the bottom of a trend. And we don't have any great, okay, we have a little bit of an alignment here. Here we have some alignments, okay, not too bad actually. So, but it's not great. So in this case, the Fibonacci isn't adding too much. Another thing that I always like to do is just see, okay, where are the higher time frame moving averages? So this is the daily 50, and it's not giving us any great additional information. So in this case, I wouldn't use it going forward. Let's see the weekly 50. And here you can see this market seems to be paying way more attention to the weekly 50. We have a great reaction or rejection here. We have a nice break and retest here as well. So in this case, I would not use the daily 50, but I would certainly use the weekly 50, because this seems to be a moving average that the market has been paying attention to a lot. So right now, this is a good state and a good way to keep the trend lines on. We could also try to find, here you can see the market seems to be accelerating in this later spot. Maybe I should use a different color. Let me just change the color here to blue. Yeah, that is good. So when a market is not able to pull into a trend line anymore, such as here, this long-term trend line started here, obviously in here, but then the market is coming shy of it and it's pulling away, so the angle of the trend is increasing, then we could try to see, can we find a trend line here? Okay, yeah, here we have a new short-term trend line, but you can see this seems to have already completely exhausted. So we have a support and a support and a support and a support. And then here it becomes resistance. So right now, I don't think this trend line is adding too much more value. So going forward, I would keep the trend lines like this on my charts. I would keep the moving average here from the higher time frames on my chart. I maybe would add also some support and resistance here. And you could color code it differently. Where is my coloring going? TradingView, hello? Sometimes it moves to a different screen, but not in this example. All right, so wherever my color coding has gone now. Oh, okay, here we go. So you could use a different color for your horizontal lines compared to your diagonal trend lines, and then this is how you could keep your trend lines going forward. Those are all currently active trend lines that are still in the market. There are probably a few more, so we could, but this one is going to be quite far away from the current price. So here you could also use this and keep this on your charts. However, this, maybe it's not bad because here's an intersection also. So those are always quite interesting. You could also see, do we have a Fibonacci retracements in the last trending leg? If this falls into this support level, that would be even more. Okay, this would be quite interesting because you can see this 38 Fibonacci is also falling into this zone. So here is a very, very important support and resistance. And the market seems to be paying attention to the 61.8 as well, both as resistance and support. So those are currently all active trend lines that I would keep on my charts for this market. And then I would just keep observing the price action. Where do we see bounces? Where do we see breakouts, retests? That's then what I would be looking for in this market. All right, let's take a look at another example. And by the way, those concepts work on all the time frames and all markets. So again, on the first time when I pull up a chart, I will just try to eyeball levels and trend lines. So here seems to be a horizontal level, resistance turning into support, and then here we have a flip, so a break and retest pattern. This is always important when you see that the market is paying attention to a level from both sides, from the top and from the downside. That is very important here as well. So very, very important level here. Then here was seems to be a trend line, in the last leg here. Support turns into resistance. Also here, confluence level. Those are very important when you see that a horizontal or a swing point in this example intersects with a trend line. That's important also. You can see maybe there's a Fibonacci retracement waiting in here. Let's see. And whenever you find such confluence levels where many trading tools come together, okay, here the Fibonacci is coming a little bit shy. And although technical analysis is no brain surgery, you would like to see a little bit closer reaction here. So not good. Then let's try to see, can we describe the lower part of the trend? So here seems to be a very big spike, and then afterwards the market has turned. Not sure if we can get a trend line in here. This seems to be very steep. So let's see afterwards once the trend has settled. Here or here seems to be then where the market has really started trending. You can see there was a, okay, actually this is a good level to have. Support or resistance turning into support. Here seems to be then when the market has been a little bit more orderly. Yeah, that's not too bad. Support, and here a breakout. So that would be interesting to see what is the market going to do when it comes back to here. And if this is going to be our bottom or this here, then I would be interested to see, okay, where does the Fibonacci retracement level fall into? Does it happen here or maybe even here? So I would just put in my Fibonacci. Okay, and here we can see two very nice confluence factors. So the 61 falls into our flip zone here where we also have this bigger trend line. That is good. And also here you can see the Fibonacci of 38 is falling into our breakout or flip zone trend line. That's good. Where do else? We probably have something lining up in here. You don't have to keep the Fibonacci on your charts. If you see that there's already an intersection, that's good enough. So we have a little bit more validation that the tools that we're using are high impact. Okay, very interesting. You can see when we connect those two highs or lows in this example, we have a bounce here. Then there's also a level in here. And sometimes it's helpful when you switch to the line graph. Yeah, line graph, you can see that in here there seems to be something. So, okay, now I should be changing to a different color. So we have, let's zoom in a bit. We have support, resistance, and you can nicely see that this falls all into the same area. Sometimes with the candlestick graphs, this seems to be a little bit all over the place. With the candlestick graph, it's hard to see because obviously candlesticks, the purpose is to give you a little bit more information, but sometimes more is not better. So let's just eyeball the level around here. You can see, okay, we get most of it. So let's see how it looks with the candlestick. Yeah, and this looks not better. Yeah, so this is definitely a level we should keep on our charts. Sometimes the market will not respect the level for a while, but then it comes back to it. Very important points here. Here not so much. Yeah, okay. Seems like after this point here, the market has really started paying attention to this level. It's not a round number, so that's not a confluence level. All right, so, and the point of all of this is that we are trying to explain, or we're trying to map out trend lines, support and resistance levels, and just in general, very important key levels that we can use into our trading right now, because you can see this is the current situation of the market. This is where the market is currently at. So all of those trend lines will help us look for either breakouts or pullbacks and moves or new trends. So this is very important. Let's also try to see the higher time frame moving average. So first the daily. Okay, the daily seems to be very important here, but currently I'm not seeing it as a very big help. The weekly is around here. Yeah, okay, so we could keep the weekly on our charts as well. We could also keep the daily, but the daily I don't feel is very helpful right now. So I think overall we have a good understanding of the current market. When we look at the weekly, you can see the market has just broken below the long-term weekly moving average. That is always a very, very important point. You can see whenever we break through moving average, often the trend changes and you want to look for pullbacks into the moving average. So when the market is above it, then you wait for the market to get back into it, and then you look for buying opportunities or just trading opportunities in the general trend direction. So now I would be leaning more towards a short-oriented market. So I would be looking for pullbacks into the moving average. Preferably, you would like to see those pullbacks also in previous or in those zones that we have drawn. And you can see that the moving average is it's not respected very cleanly often, but the market is pulling into those zones. So it wouldn't be a very big surprise to see a pullback maybe in this region here, even though it may be violating the moving average. But here seems to be something. And here you can see, here is actually the 90 round number. So that is adding a lot of confluence here. So what you could do is also mark this on your charts in a different color. Maybe not red, that's a little bit confusing. So here you can see we have a 90 round number, which is always, and you can get it correct here in TradingView, 0.9. Round numbers, especially those big round numbers, are very important. So yeah, this is how I would now wait for the market to get back to such a important zone and then look for trend trading opportunities. I would then go down to a lower time frame on those markets, as I've shown you in the last video, I think, or the video before that about trend trading. So this would be then my higher time frame, and then I would go down maybe to the 30-minute and look for trading opportunities there, then into the trend direction. But this is just a general first way of how I would map out my charts. And if this is too much for you, get rid of a few trend lines that are not currently active or not as close to the current market, and then you're already looking at a much cleaner chart. Don't forget you have a Fibonacci here as well, as we've seen. So a lot of things are really coming together in this zone. So this would be currently the highest impact zone. So if the market moves higher, this is really where I would start looking then for opportunities into the trend direction. Whoops. And the trend direction is determined by the long-term moving average most of all. So I hope you enjoyed this. This is a little bit more of a hands-on approach. I share my ideas or my approach, very basic mapping out of charting opportunities and just making sense of charts. If you like those types of videos, let me know in the comments below. Leave a thumbs up and also make sure to subscribe. And then you will hear from me very shortly, maybe. Happy trading.